here with my mate today, Steve. He is a property investor, coach, and now an author. There's a lot of interesting things happening in the market at the moment. So I've got a few questions for Steve, and I reckon if you own a home or you want to get into the market, or maybe you've already got a home and you want to get another investment property, I've got some good questions to ask Steve.
Awesome, can't wait. Thanks.
Is the FOMO about to come back to the New Zealand market in the second half of 26?
Yeah, great question. I mean, this is the question that everybody wants to know. Like, when's it going to take off again, right?
Crystal ball.
And yeah, I'll polish up my crystal balls and let's have a look at this, right? So let's define first what FOMO is, right? Fear of missing out is greed, right? And as they said on the movie Wall Street, greed is good, because if somebody sells a house and somebody wants to buy the house, that's a willing buyer, willing seller situation. That's the normal everyday market. When somebody's selling a house and 5 people want to buy it, the price goes up. And so everybody times the market. They try to buy at the bottom and sell at the top, and everybody wants to own a property when it's lifting in value. And to my mind, that's the wrong way to actually look at it. The way to look at it is to have great cash flow, great resilience, and be in the market for a long, long period of time. But if I was asked to say whether prices are going to shoot up in 2026, I'm going to say no. And that's for economic and market influences. Now, one of the key market influences we're going to have between now and the end of the year is we're going to have an election. And a lot of the different political parties in this election are saying capital gains tax and some really scary stuff. And that's just the red team. Some of the other minor parties are even more radical with their tax policy and their tax treatment. And everybody knows that the market will just handle what happens, right? It's like equilibrium. The water finds its own place. So if they bang a new tax on us, it's going to make a difference for a little while, then it's just going to even out. But what an election does is it creates tension and people pause and they wait. And that's why I don't think we'll have out of control property inflation between now and the end of the year. I think we'll have a very readable normal market of maybe a 5% increase in assets. Now, there's obviously some regional differences there. Auckland's kind of patchy. Wellington's kind of sucks. And I'm allowed to say that because I'm from Wellington, all right? I just wish Wellington would be better. Christchurch South is actually booming really hard. A lot of that is Fonterra money, dairy money. They're flush with coin. But also Christchurch is a brand new city, which is helpful as well. So I don't think it's going to go crazy. I think it's going to be readable. And I think that the normal sort of beige, brown, boring, normal market is when most really good investors actually make all their money because it's predictable and you can read it. You know, banks still have the same amount of money that they want to lend out in any marketplace. Banks don't make money out of holding money. They make money out of giving it to you and making you pay for it. So that's always going to work really well. And honestly, I've been out shopping for houses the last couple of months and there's some really great deals out there and people haven't woken up to this fact yet. And we're a first world country. We've got banks that work and mostly the water comes through the pipes, once again, not in Wellington. And so everything works, right? It does. You've been doing a fantastic job of doing up your property too, right? Somebody's going to come and have a look at that and fall in love with it. Come on. I don't think it'll go crazy. I think it'll be subtle. I think 2026, it could start to really warm up.
This question is for the investors. So the data shows Canterbury, Otago, and Southland are the only regions consistently hitting record highs right now, while Auckland and Wellington flat as a pancake. Is it smart to head down south right now, or is the real opportunity now in the undervalued Auckland suburbs?
I think there's always value in Auckland. I've got a soft spot for Auckland. Obviously, I've lived in Wellington for many, many years. I'd really love to move up to Auckland. I'm planning on it. And I think Auckland's like a patchy network at the moment. You see some really well-prepared properties selling for still really great prices, but not record prices. You know, things aren't necessarily reaching CV or above. And you're certainly not seeing the heady heights that you did a few years ago, post-COVID, where, you know, a $2 million house would sell for $4 million. But in Auckland, a $2 million house can sell for $4 million. It's got that elasticity to it. If I was a long-term investor and I really had $800, $900, $1.3 million and I wanted the best bet or the best option for that to really lift through the roof in the next few years, I would still probably buy in Auckland. But in Auckland at the moment, you can't really get yield. So you can't get cash flow from Auckland. So investors are not looking at Tauranga. It's way too tightly held. They are sometimes looking at Taupo. They're sometimes looking at Hamilton. Hamilton's a great market because it goes out in all four directions. There's no water, no hills, nothing in the way. So developers can chop it up. Christchurch obviously is bolstered by a really great economy at the moment, but it's also bolstered by the fact that billions of dollars have been spent there for rebuilding Christchurch. And Southland and some of the smaller towns, your Invercargills and Gores, they've had record highs, but that's because they had record dumps in value before that. So they were starting from a record low. So they've gone back to normal and it looks like a record jump. Whereas Queenstown and Wanaka is the golden child of New Zealand real estate because, people get old, they get rich, and they want to retire somewhere beautiful and they go there with money and they turn up with money, but they don't make money when they're there. So there's no, the economy in Wanaka and Queenstown isn't manufacturing and it's not transportation and it's servicing the people living there.
Retirement village.
It's a retirement village. Thanks for saying that. So there's a lot of money there and it's a lot of cash flow money. Like it's freehold housing. People go down there and buy a $2, $3, $4, $6 million house and they don't have a mortgage. So they've got a lot of cash flow to them. Christchurch is still a working town. It's really still an agricultural town. It depends really what your portfolio needs. If you need cash flow, I'd be looking at small, but not tiny towns. I hate towns where one industry fails. You can name this town. It used to have a mill, and now it has nothing.
Where my investment property.
Oh, sorry about that. Just let me rub that one in.
Yeah.
I wouldn't be buying in Tokoroa at the moment. It's just, it's a bit depressed. But
I did buy it for $205K.
Exactly, right?
And the rent's $500. So it's really good yield.
Yep.
But there won't be any gains.
But that's the reason why you're buying those towns. Because you don't buy in those towns for gains because you don't get them.
Yeah.
You buy in those towns for cash flow.
Yeah.
Uniquely, that's the only thing they have. If I wanted to buy for gains, I would try and find a block of flats or a home and income property on the North Shore or something in Auckland.
Yeah.
The likelihood of a $200,000 house in Tokoroa doubling in value is a lot less than the likelihood of an $800,000 house in Auckland doubling in value. It's just more likely to happen here. Big airport, immigration, people turn up in Auckland, then they spread out from there maybe. All the money's here. I travel quite a lot, and Christchurch is a bit of a misnomer because they've just built a new city there, right? Wellington's a bit sad. A restaurant closes down and doesn't reopen as something else. In Auckland, there's always an economy happening. There's always bustle. There's always traffic. There's always things going on. And it's become the powerhouse of New Zealand business as well. If you're dealing with somebody nationwide, head office or marketing department, it's in Auckland these days. That's just the rule. Obviously, just written my book after 30 years of property investing, right? And I get asked quite often what I would do if I was to start over again. And I think the thing I'd do is move to Auckland and start buying here. Because I've got a number of houses in Wellington and a couple up here in Auckland. If it was the other way around, I would be a much more wealthy property investor. Wellington used to be this cool little capital too. We were rivaling Melbourne for like laneways and restaurants and cafes. And knowing the age group of your average watcher, I'm going to be very, very careful about how I put this. But I don't own a bicycle. But if you live in Wellington at the moment, you kind of have to because it's the only way to get around. They're just so many bike lanes, so many massive infrastructure projects that aren't making any money for the city. So many years where we haven't fixed core things that have gone wrong. To be fair, it goes back 20, 30 years to just a lack of investment in the city, a lack of ideas about where the city should or would go. Funnily enough, steel costs. Because the cost of steel means going high-rise became very expensive, so we went out and went higher density. And you've seen that in Auckland too, but Auckland's got way more 600-700 square metre sections where you can put 14 townhouses on it and get density that way. And Wellington doesn't, because if you look at an aerial photograph of Wellington, there's a lot of water. You can't build there. So you have to go either out or you have to go up. And going up is very, very expensive. Not everybody wants to live in an apartment too. It's going to be interesting to see what happens. I just think, the biggest thing to happen to property investment probably in the last 10 years is the Auckland Unitary Plan, because it basically said nobody can afford a white villa in Herne Bay anymore with a full section. So we're going to allow you to say build 3 or 4 on that site as of right without having to go through a lot of, red tape. And so everybody did that. And we've just got much denser suburbs for it. Basically has meant that Auckland's gone very, very dense in the middle and then spread. The North Shore now goes way, way up. South Auckland is Pekino now. It used to be, Drury. Soon enough, South Auckland will be Hamilton. It's just going that way.
Yeah.
It's going to be interesting. Be a few interesting years.
So what was it like being an investor, 20s versus your 30s?
Yeah,
40s,
yeah.
50s?
The generational change in property investment has been really interesting because, when I first started investing, I'm 53, I'm going to admit it, right? I bought my first house when I was 17. It was a Hardy's built, pre-clad house, banged on the section, no fence around it, no gardens. It was bad. And now property investing is very, very different. But I think the mentality you've got to have as a property investor is also very different. I think you've got to think about who you're going to be through the generations. In your 20s, you just want to be liked. You want to have friends. You want to go out and meet people and, And in your 30s, you'll probably start a family and you're going to have some kids and you're going to do all of that. And in your 40s, you're going to become very, very good at what you do. In your 40s is the decade, realistically, where you get really good at your job. And in your 50s, you get paid the most money you will in that decade for the rest of your life. And in your 60s, you should be able to slow down. But what you do in your 60s, and I'm not there yet, but I'm pointing this out, is that you try and regain your health from your 30s. So for my opinion, and this is going to come back to houses and finance in a minute, I promise you, try and get 10 years ahead. Try and regain your health in your 40s or your 50s. Make all your money in your 20s or your 30s. Forget about all the social shit and put your head down and get stuck in. Money isn't the measurement system. It's not the prize. Wealth isn't the aspirational thing for me, and it hasn't been for years. Money is just how we measure it. That's all it is. The real target, the real goal is actually freedom. So what I mean by that is if I have a number of rental properties and a job I really love doing, and I get to sit there on a couch and talk to you and talk about my book and my industry and stuff that really kind of excites me, right? That's way, way better than having to work in an office or in a factory, or I've got to do my 40 hours, or the different levels of freedom is the aspirational target that you're after. And so what I would say to people who are in their 20s and 30s is that you're doing the hard yards. You're actually doing the first couple of chapters of the book of your life, right? And the money that you earn, as meager as you may feel that it is the seed capital you use to invest in your future. So overpay your mortgage, do a Kiwi saver, buy a little bit of crypto, put a couple of bucks into gold, have a play around, screw up, lose some money, hate that feeling, fix it, do better next time, learn all of those things, and then realize after a period of time that working for 40 hours a week sucks, but you do it a couple of decades and then you get free.
I think I realized that 40-hour week sucked in my first year of working.
Yeah. And don't get me wrong, I know that that's a middle-aged, white, condescending opinion and view. And I know that there's people out there that have shit jobs that they love and they wouldn't do anything else. But that's a form of freedom too, because they choose that. I just personally feel like being able to do interviews and catch up with your friends and socialize and travel and give my kids opportunities that I didn't have, that's the sort of freedom that I'm after, Yeah. Flagrant promotion of my book here, but...
To it, go ahead.
All right. So I wrote the book because it's the book that I wanted to read 30 years ago when I was starting. And it just wasn't one. There was Americanized versions that didn't really translate very well. But realistically...
Rich Dad, Poor Dad?
Yeah, exactly. Yeah. And it's a really great book and I love reading it, but it's not a how-to manual. And my book is. But also, I've got 3 kids. I love them all absolutely dearly. The book's to them, it's written specifically to them, but particularly the middle kid, because he has no interest in wealth creation. And so, in my mind, he was the harder kid to get to. And so this is a manual for him, because if I'm not here one day, what did Dad do again? What was he all about? Well, I've put all of that into the book. It's not a boring tome either. There's some bloody spicy stories in there. A couple of stories I'm a little worried about. There's a couple I barely got through past the legal department of the publisher. I wanted the book to be a testament to the fact that not all property investors are, complete wallies, and you can have a bit of a giggle and that it's a fun industry to be involved in. I've been a full-time property investor for nearly 30 years, but you should be able to pick the book up, read through it and go, I'm going to have a property investment side hustle that's going to make my future a lot brighter, a lot more wealthy, better for my kids, more relaxed, more freedom. And I think that's the takeaway, I hope.
Achieve the FU some.
Yeah, to a degree, yeah. I mean, it's a lovely place to be, let's be fair.
Yeah, not being a slave to
Yep.
anyone or money.
Hopefully, yeah.
Okay, great. You've always been a fan of yield.
Yes.
With Invercargill and Dunedin showing resilience, are these still the go-to spots for cash flow, or have the prices there killed the buy and hold math?
Yeah, awesome question. I'm going to differentiate the question a little bit for you there. I've always enjoyed yield because it means cash flow. And what it means is that a property that I can purchase will actually bring in more money than it costs to own. And so when most people have a financial oops, insert swear word up, it's a cash flow issue. It's not an equity issue. So what the first sort of scene of that is bank rings you up, says your mortgage payments hasn't gone through because you don't have enough money in your bank account. So that's a lack of cash flow. So having heaps of cash flow gives you like elbows, it gives you resilience. You can fight through just about anything. And it doesn't mean that you give up on capital gain, because when the market goes up pretty much everywhere, right? So I've always aimed specifically for cash flow. I've always wanted to have a few $1,000s a week coming into my bank account, whether I work or not. And that's the great goal, isn't it? That's the target. Yeah. And if you can do that, you can Airbnb your house and you can bugger off on a boat or go to Bali and you're actually earning more money offshore or doing the things that you really enjoy doing than you would be doing if you were back here working and being a wage slave, right?
Yeah.
So I've always gone to places where I believe that I can get really good cash flow like that. And as you mentioned, Invercargill, Dunedin, Hawera, Whangarei, some smaller and regional towns have been promoted as being great for cash flow. And they are. But
wait, what's in Hawera now? Because I only heard of it because of, the big grand plan, the infrastructure plan in Taranaki, but...
Yeah, it's a medium-sized town with not much there. There's some manufacturing, there's some freight, there's not actually that much else there, but it's not tiny. So let's consider tiny 12,000 people or less. So Palmerston North, for instance, John Cleese had it right about Palmerston North. I don't know if you know, he went there and he was like, this is like a slow death, basically. He hated the place and he publicly said it, became real famous. And now Palmerston North hates John Cleese and they hate each other. So anyway, Palmerston North is a bit sleepy, but it's got lots of land. It's got a university. It's got infrastructure. It's got, more than one industry. So that's what I'm aiming for. Small towns, great cash flow, more than one industry. And there's one town at the moment that I would add into there, which is fantastic for cash flow at the moment because it's, I'm not going to say dying, but think of the word dying, Wellington. Because I keep bashing it up, right? I keep giving it the beatings, but it's the capital.
Yeah.
There's 350,000 people there.
Yeah.
It's hard to develop new homes there because, because of the shape of it. And there's bargains in Wellington at the moment. And nobody wants flats, apartments, high-rises, anything with an earthquake rating, anything that's leaking. The prices are just falling out of the sky. And so what happens when prices dump really, really hard in one particular location? We're here in Herne Bay. We're not very far from Ponsonby. Ponsonby used to be one of the worst suburbs in Auckland.
30 years ago.
30 years ago.
Yeah.
And what happened was prices dumped down hard and they became super, super cheap. And developers and people wanting to build stuff and wanting people to come went, where's the cheapest place to buy a commercial building to put in a cafe or a pub? Bloody Ponsonby. God, that suburb's cheap at the moment. And they came in and they brought money and it went woof. And look at it now. And suddenly it's where everybody wants to be.
Yeah.
So I'm not saying that might happen to Wellington. We need to rustle up, kick a few people out of the beehive first, maybe.
Yeah.
Maybe get a decent mayor or two going.
Yeah.
But it's an economical option for cash flow at the moment. And if I was to say a 5-bedroom house in Invercargill versus a 5-bedroom house in Wellington, which do you think is the most likely to actually come up in value nicely at the moment? Probably Wellington. Bigger population, more money.
But the house prices are not the same. Like if you've got...
Well, they've gone down 27%.
Right.
But if you're considering investing $800,000, you might choose to buy 2 houses in Invercargill over 1 house in Wellington. But
or you can buy in Auckland for that.
Yeah, exactly. I mean, I really think the Auckland market starts at about 750,000 at the moment. It used to start at about 1.3. You know, you couldn't get anything half decent for less than 1.3. It's been a long time since I've jumped in an Uber and the Uber drivers talked to me about real estate. You know what I mean? They'd stopped being the flavour of the month in conversation in New Zealand at the moment. And everybody's kind of gone to sleep a little bit on property. And I think if people jumped on Trade Me and looked at the 56,000 properties available around New Zealand at the moment, they would see some really, really interesting prices and some really motivated vendors. I helped some people buy a house up here in Auckland yesterday, and I said to them, you're paying a lot of money for this house. It's a premium product at the bottom of the market.
Yeah.
In 5 years' time, you're going to look back and you're going to go, look at the smart thing we did.
Yeah.
I truly believe that.
Yeah. I do want to get out of where I am.
Yep.
And then I'm thinking maybe Birkdale.
Yep.
Would there be any other Auckland suburbs that you recommend at that kind of price point?
There's kind of like satellite suburbs, right? Like everybody knows that Herne Bay, Ponsonby, Westmere are very good. Everybody knows that Remuera, Mission Bay, very, very good. But I really like those one suburb out from those suburb ones because they tend to have a massive boom effect.
Are those a sleeper city?
Yeah, they absolutely can be. You know, Remuera was traditionally where you would go to buy a small mansion with a tennis court and a swimming pool.
Yeah.
And your generation don't want that. They want to set and forget. They want to lock the key and jump and go to Bali. They don't want to mow the lawns. They don't want a gardener. So they flocked into these suburbs where you've got a white weatherboard on the front and a glass back and a small swimming pool and some AstroTurf. And I think that the extrapolation of that is they don't want an apartment. They still want a house, but they want a much smaller house. And that's where you've seen Hobsonville and, you know, some of the suburbs, 4 or 5 suburbs out, Albany, go absolutely crazy for that. But I think the real boom is going to be that one suburb out.
Okay.
So I would look at the suburbs that your parents probably bought in and then go one out from there. COVID's also sort of mashed up where people are willing to live because a lot of people have gone, well, I'm only going into the office 2 days a week now or something like that. Their living in close to the city has changed because they don't need to be connected to a train or a bus or an office or my park in town. They'll work anywhere remotely. And I think that's become really interesting as well.
It's a bit more space, a little bit more lifestyle.
Push people out. They're willing to move out and not commute as much.
Would Orewa be, is that too far out, would
you
say?
Look, I really like north of Auckland. I think that Browns Bay, Red Beach, the peninsula, maybe not. It's up and then left and out of it further. Orewa's gone from being like a sleepy little retirement village to being just North Auckland. Takapuna right through to Browns Bay has become, is very African. It's very home and income, you know. And
very African.
Yeah, there's a lot of South African stuff up there. They love it. Yeah, it's very, very African. Yeah.
Okay.
No, I'm not being funny about it. It's true. But also it's very hilly. So there's a lot of people like spend a lot of money to get a view or to perch something up above something else or, you know, there's good value. Lots of good value up there.
Yeah. I mean, so many places on the shore you can grab a 3-beddy for 800-900K now.
Which is you saying 800-900 is cheap. And I remember buying in Auckland for 80.
I mean, when was that though?
I'm very old. Thank you for pointing it out. Cheers. Friends like this, right? Yeah.
All right. Well, thanks so much for your insights, Steve.
No problem. Thanks for having me, and thanks for letting me promote my book in all good bookstores now. Honestly, it's a great book, and it's all of my brain download. I'll never write another one. It was 15 months of horribleness getting it all out there. So I hope your watchers really enjoy it.
I hope that was really educational for you guys as well.
Right.